Hello traders, it's Samurai Trader here. Welcome to session 103, the $1,000 a day challenge. How to average $1,000 a day net profit day trading within just 1 or 2 hours a day. As you see in most of my videos, I usually wrap my trading up well under achieve my target in well under 1 hour. Now today we're going to be looking at a number of trades I took on Friday. So I had 3 out of 3, and I actually recorded part of a session, so I'll play that back, the recording of the 3 trades, plus then we'll go to the live chart so I can just explain some setups and exactly what I'm looking for and why my strategies work so well. As we get underway, we do need to pull up the disclaimer. Traders, don't trade with money that you can't afford to lose. Please feel free to pause the disclaimer to read, or pause your video I should say, to read the disclaimer. Very quick advertisement: if you haven't already downloaded my free day trading ebook, please go to the link below. I'm also going to be referring to an Excel spreadsheet. You can also request that as well, so you'll see that down below, the link for that. Even better still, become a member. I'll just be very quick with this. For $197, you get all of my indicators. I've got them for TradeStation, NinjaTrader. With MT4 and Thinkorswim, I've got either custom indicators, or either way I'll give you the settings to use so you can set up the indicators exactly as I use them. Over 200 hours of online instruction. There's dozens of videos. Look, as my members say, the members area is like a gold mine, but the best part is you don't have to go and watch them to learn my strategies, because on top of that, as a bonus, you can attend 8 of my live coaching sessions. Now they are recorded. If you can't attend the live sessions, if after the first month you love it, which you will, you can then sign up at $97 a month and have my ongoing coaching, but that's optional, and you've got to email me if you'd like to do that. All of that for only $197. Let's now move on. So what would $1,000 a day net income mean to you and your family? For most people, that would be a game changer, a life changer. Now this is where I want to reframe how you may be thinking as a trader. If you're watching this video, it's because you want to learn how to trade, or maybe trading hasn't been good for you up till now, or perhaps you want to improve your trading results. I talk to traders about starting on the simulator, then going for $100 a day and building from there. Now I know that so many people, and you're sold on the dream of earning $500 or $1,000 a day per contract. Is that achievable? Yes, it is, trading the right strategies and the right time of day. Is it realistic for a newer trader? No, it's not. So start small, and that's how you build your confidence, and we step it up with your experience. And I have so many members that are going for this. That is, they target $100 a day and they build it up slowly. They're building both their confidence and competence. Now that was taken directly out of the chat box, and then eventually this is what you sort of made $4,200 today. Now of course their results may not be typical. I've got to say that legally nowadays, and I've been trading now, day trading now, for 28 years, so you may not be able to repeat what I do. However, traders with the strategies, they are pattern based, and as the late Mark Douglas says, that's what you want to be trading. So I target $200 a day per contract, so I'm happy with 1,000 a day. So trading just 5 lots. I might add and go up to 10 lots, but I'm not a 100 contract trader. Some say, well, why don't you trade 100 contracts? You've got such a high loss win ratio. I'm in my 60s. I'm happy with what I earn day trading. There is, it's a fallacy where they say that there's thousands of traders earning 2, 3, 4, 5 million a year. Are they out there? Of course they are, but you've got to trade within your comfort level. And by the way, when you're trading for a hedge fund or an institution, it's totally different psychologically. It's someone else's money. So I'm going to show you this recording in a moment of these 3 trades. In fact, we're at that there is the first trade there is at 1:55. I'm actually recording this just before I go live again at 1:50 a.m. Now this is Central Standard Time. No, you don't have to be trading that time. It's just this is nearly 5 p.m. my time, and I love this time of day for trading. It suits me mighty fine. Now the market's open at 6 p.m. Eastern Standard Time, so this is fairly typical, especially on the NQ. So we're on the NQ 4-tick Renko. Now as we head into the London session, which starts really in 10 minutes from now my time, and really right at this time here the London session opens when I recorded this, you might want to jump up to the 6 or the 8-tick Renko. You can't trade the 4-tick Renko during the New York morning, for an example. You can trade the 8-tick sometimes. You can trade the sorry, I'm just going to pause this. My dog's going crazy. Now you mightn't have noticed that pause, but my grandson just called in to come visiting. As I always say, traders, my videos are raw, real and unedited. They're real. Okay, so on the 4-tick, it's not practical you trade that at all hours. Now for an example, if I'm trading the 6-tick, which is generally what I would step up to very soon, I'm after $300 a day per contract, and I won't get right into it now. It's because of a greater amount of equity involved. Now what I want to do is quickly drill down on how much capital do you really need. I mean realistically, none of this BS that we see in the YouTube videos that give you unrealistic expectations and telling you that you can risk 5%. That's just not true as a day trader unless you're very experienced. Now Stephen Covey unfortunately passed away a couple of years ago after a bicycle accident, but he wrote the 7 habits, and one of the habits was and let me quote him, begin with the end in mind. And what he states here, to begin with the end in mind means to start with a clear understanding of your destination. It means to know where you're going so you better understand where you are now, and so the steps you take are always in the right direction. So it's a little bit like a ship without a rudder. Of course, is a lot of people are like a ship without a rudder. They're just floating around aimlessly, all these figures in their head where they want to go. Well, creating a realistic trading plan is the first step. Now to trade this market realistically, traders, to do it safely and the way I trade, you need to start off with either $4,000, or if you start on the micro, which is 10% of the value of the big contract, you need $400. Okay, now if you don't have 4,000, or even if you do have $4, $10, $20, $100,000, start on the micro, cut your teeth there and go from there. And even before you start on the micro, you start on the simulator. Okay, you make all the mistakes on the trading dome before you go live, and any of the other rookie mistakes that are easy to make. Now here you may start on the micro and then switch over or add money to your account once you build both your confidence and your competence. But here's the reality of this, and this is a spreadsheet you can download, and I've done a little training video so you can actually learn how to use these figures. It's just not a matter of punching anything in. There's a technique to it in how this comes together. But here, if you're going for $400 per contract and your target is $20 a day, you can see here by that time, or by 12 weeks, you're now trading 11 contracts and your account is now nearly $5,000. Now you can roll over and start trading the big contract. And how this works is you only start trading a second contract when you have 800, a third contract when you got 1200, a fourth when you got 1600. We're using the market's money. Okay, you're not building your account, you're not progressing. There's only one way to learn how to day trade. It's the right way the first time. Now what it comes down to then is within weeks we've now got the money there within to roll over, start trading the big contract. Okay, 12 weeks we can start there. And is $20 a day realistic? Well, here we've got us trading here with just one contract, teaching members, $63, $75, $88. Here I'm talking $20 a day. Right, so yes, you can do this with your right training, with patience, and applying it correctly. Now we now switch over to the big contract where our target is now $200 a day. Now over here we can see then within a further 12 weeks we have the potential of earning $10,000 a week trading around 10 contracts at a time. Now what this really comes down to, you're starting off with $400, targeting 20 a day, and we're going to be showing you how to do that. Our account is now 46. We now go over to the big contract. Within a further 12 weeks our account's now 46,000. Total time taken 24 weeks. The question is, where will you be in the next 6 months? That's what it really comes down to. Now one thing I do want to say, because you're going to be looking at me, or I'm going to be potentially training you as your coach, you've got to go live first. You do not start trading even a micro until you've mastered things on the simulator. Okay, because if you do, you're developing the wrong habits. You develop what we call muscle memory. But anyway, I'm digressing here, but once again it's about learning how to trade correctly. Now in the end, how do you achieve $200 a day on the 4 tick, risking a maximum of $80 per trade? Okay, down here you need between 3 and 4 trades a day net after any losses. Now for members watching this, as you'll see in a moment, how I got those, but you're going and how we get there: 34Bs, your 55s, your 89s. Okay, and this really comes down to having the patience to waiting for the setup. Now just before we go to the recording, a couple of things we need to consider. On the charts you'll see that I refer to pivot levels for current days, or the prior days, sorry, open, high, low and close levels. The major EMAs, particularly the 89 and 200 EMAs on the anchor charts, the intraday swing highs and lows, that is swings as you're trading throughout the day, and the current day's open, high and low. Now with all of these are what we call price magnets, also major areas of support and resistance. Now all of these you can have on just about any trading platform. There are indicators available which will plot all of these automatically anyway, so that makes life a lot easier. So what we're going to do, we'll go to the recording. There's no sound on there, and I'll just walk you through it, and we can watch it tick over and I'll explain my thinking. Now this is Monday and I did these trades on Friday, so if I'm a little sketchy on what I'm looking for or exactly what I'm thinking at the time, 4 days is a long time in my world. Okay, so let's go over to here. So first of all, just so you clearly understand what we're looking at, this is a 4 tick NQ Renko chart. Now what it means is from the low to the high of these candles is 4 ticks, or on the NQ $20. Now also what I'm about to show you here you can apply to oil, the ES, YM, the Russell, which I just finished doing a training video for members on the Russell. It doesn't matter which market, the currency futures, Forex, it doesn't really matter. Okay, now what will differ is your brick size. Okay, so Renko means brick. You can apply this to any type of chart, a time-based chart, tick charts. I prefer Renko. It just smooths out price action, and it does make it look, once you get into Renko you'll never probably go back to anything else. I will refer to a tick chart just to check a couple of things, because one thing about Renko, it smooths price action out, but sometimes you can lose some additional information that's hard for you to see there. But there's what we call some Renko tails, which can be little pullbacks, and they can give you some nice scalping opportunities, but we won't worry about that to begin with. Now first of all, here we're crossing below the 200 EMA. Let me get this ticking. When you cross under the 200, quite often then, and I'll pause that here, quite often then that will lead to a new trend or a new potential an extended move. Okay, so we want to take notice of that. Now first of all, I'm going short here. Traders, what's the direction of a trend here? And you'll have to excuse this bar, nothing I can do about that down the bottom here. Here, this is the important thing. We pull back to the major EMA. Okay, I've now got a bounce. I've got a wee bit of divergence, not a lot, and I call this a 3B. Okay, so I've got a 3B set up here. Now usually I will come down and target a prior swing. So remember, before I was talking to you about looking at swings, oh, and I should just correct myself. I'll 90% of the time use a fixed target, 7 steps, irrespective of the time frame. I go for 7 steps and I get out. My break even is 5. I'm after 7. But where I'll increase my target is if I feel I've got a major swing high or low, or I've got a pivot or a major price magnet in front of me. I will go for a larger target. But the way I look at it, get in, get out, get paid. Leave something on the table for the other guy. Okay, so I prefer to do that. Now remember, you only need 3 or 4 trades a day and you're there net, even less than that sometimes. So there's no need to be greedy, and get in, get out, get paid. And you may have heard of the concept called POQ. It's called the power of quitting, POQ. And so to get in, it just makes life a lot easier. But anyway, so on my matrix, on my dome, I'm automatically going to set up and make my trades here. Now let me just get the dome and just show you what I mean. So if I was trading live, this is what you'd be actually looking at, traders. Okay, and down here is where I can edit. So if I'm on the 4 tick, which is what we're on now, I've got a stop loss of 14 and a target there of 16, and I go to break even at 10 ticks, and want to go to break even 10 ticks plus 2. So break even is my entry price, plus I lock in $10. Why? Covers your commission. And the way I look at it with commissions, and typically it's around $4.18 I think, with my broker, is that you know, 1 tick for the broker, if you like, the rest is mine. It's one way of looking at it. So just wanted to show you that's what we're doing. So I would enter the trade here using that, but then I will manage the trade directly on the screen. So you got the ability to do that on most trading platforms. So I'll enter here, usually using a stop limit order or a limit order. I will use actually on here I did use market orders, I think, on the next 2 trades, and the reason being I'll explain in a moment. So in fast moving markets, I will then use a what was I saying? I'll then use a market order. All right, so let's continue with this. So this is a 3B. So I think I did go for a larger target here. So let's just watch this for a minute. Now the recording here, this was at about 158. Now here I am making my target there a wee bit larger, and the reason being, we're about to have the London Open, and I'll quite often say to members, look, just be very careful trading around the open of any market. For an example, the New York Open, I call that the killing field. Very easy, particularly on the nifty Nas, or the nasty Nas as some people call it, the Nasdaq. It can be very, very whippy. Now what about oil this time of day? What about other markets? Look, there's some really good markets this time of day that you can be trading. Now here my target is down here. So what I'll usually do, if I'm going for a larger target, I will usually lift my stop loss back up. In other words, when I go to break even automatically at 5 steps down, I'll quite often lift that back up. Okay, so and I think I probably even will do that here. I do it most times just to give it a bit of wriggle room, particularly this time of day, because we're about to get a ton of volume. The anchor charts are in a downtrend, the entry charts in a downtrend. Okay, so usually I'll give it some wriggle room just there. Now come on, I might even hurry this along a little bit here. All right, now this is called taking a bit of heat. Okay, so, and for members watching, this is actually turning into another trade entry called a T10, which is a very good reversal confirmation. So I've actually got another setup just here called a T10. Ideally, if you get the super scalper, by the way, is the white paint bar. Okay, so that's a nice confirmation. Let's just go along a bit further here. Okay, I'm just going to hurry this along. There we go. So now we're starting to trend down. Now you'll see here that so I'm a very simple trader as far as my targets go. Now just note there, automatically my platform's taking me to break even at 5 steps. I'm going for a larger target. Now say if I feel the market stalls, as this target here, I'm targeting this low over here, not that one. I look for my major intraday low, and what I'm checking out there, by the way, is to see if I have any pivots below me. Now see that there, that's a pivot, that's yesterday's close. Here's another pivot. Now they're important because they become price magnets. Now what you don't want to do if you're going for an extended target, I don't want to run bang into a pivot and have a surprise. Okay, so just here finally we got filled there on 5 lots, so that's our first contract. Now this, at that time the market's open, so this is really starting to move. Now just here, if I remember correctly, there was yesterday's high or close or what, and I can't scroll down just below and see this here. For members watching this also, you can see a nice T3 setting up just here, but watch what happens. This is yesterday's close. Now for new traders watching this, a T3 is a reversion to the mean trade, but note that here, see this gap between yesterday's close and price action. Be very wary of that. When we have that in a faster moving market, what'll happen quite often, you'll get faked into a trade only to see it come down a couple of minutes later and test the low or yesterday's close or the pivot. Now see that coming down now. So normally if we were bouncing off that level, we would have an entry called a T3. It's a reversion to the mean trade. However, I don't want to take that unless it's off a pivot level. So now let's see if I can get a trade in. Now I can't remember exactly, got a feeling we then collapsed through this. Okay, so here also you can't see it, but now we'd be getting some divergence on our entry chart. Now this also, look at this, is called angulation. Just here, now this is live, this is recorded in real time, so that's the speed of the market, which generally if you want to trade this time of day, you simply up the time frame to slow your chart down. The lower the time frame, the quicker the trade, or the faster price action is moving. Now this is a T3. Now note here, I've gone to break even automatically and I've hit my target. Now that target there was 7 steps. So I'm quite happy to get out there because I had what was once support quite often becomes resistance. So I could possibly get, and typically we would get another setup in this sort of region. So I know I did get a short up here somewhere, so we're out. So we got 2 out of 3. Now what makes my life so much easier is the anchor chart. There are rules to how, and see the white paint bar here, so I call that the super scalper. So that really sets the trade up for me. Now here, what about entering here? I would not enter until the anchor chart 1 candle is also red. So I don't have it to show you here, but if you looked at this on the anchor chart, and I've got a mathematical formula that I use for assessing and what time frame. So this is a 4 tick. So I've got a specific time frame that I would use. In actual fact, if we look at this just here, let me just pause this. And so because we're jumping ahead here, I just want to show you this. So typically and this is the training session I do for members, except I've removed here for the public video the time frames that we use. So I've pretty much got set time frames, and it's a, well, I want to call it a bit of a trade secret, something that I've discovered after 28 years of trading, where I have an anchor chart 1 and an anchor chart 2, and settings I use there. So we're on the 4-2 now. On the anchor chart 1, when I have a deep pullback, the anchor chart 1 candle must close. So if we were looking at the anchor chart 1, you would see all green candles. But what we're looking for then is not only for the super scalper, but I'm also looking for the anchor chart 1 candle to confirm the trade entry as well. Okay, and I want you to think of the logic in that. Let's also, we're surfing the waves here in the direction of the tide. Here the tide turned on a higher time frame. Now we're waiting for it to head back down again. Okay, that's the logic behind it. So that's very, very important. So let's go back up here again, start here. And so what I was looking at here was a retracement. Whenever I get a pullback to a pivot, back to my 89, and traders, for my members watching, you're about to get a little bit the farm here as well. Look at that there. I've entered the trade. Okay, just here we went to break even automatically. Why? Because we hit 5. I lifted my target back up. Why? We had an incredible potential for making a lower low here, and just there I wasn't filled. I think I was within 1 tick of being filled. So the reason I then took my stop back up was because if it had come up, it would have stopped me out, basically making only a tick or two. Oh, and now I'm out of that trade, so I've hit my target. So just actively managing the trade. Now you could just set and forget, as I call it as well. Go for the +7 or more, and notice this swing down here. Now we'll see what happens in a moment. I think we actually punched through that swing low, but see what I mean about the importance of knowing where your swings are. Now actually I should have really increased that target by a couple of more steps. Now each one of these steps here is worth $10. Okay, so they're worth $10 per step. So effectively I'm after so I'm after $70 moves per trade, or if I get out. Now just here, this is another thing. If I'd have taken this one, this is what we call a pivot magnet trade, by the way, which is a good 90% trade. If I take a pivot magnet trade, you'll find I will get to break even if I haven't hit my target. Now for example, if I'd have taken this trade, by the time I hit there, I may not have actually automatically gone to break even, so I'll manually go to break even. Why? Because quite often this will happen, we'll bounce. But a pivot magnet trade is where we're trading in the direction of the overall trend when we've got all 3 time frames. Oh, actually, as long as the entry in the anchor chart 1 confirm, very high probability trades. Now let's just quickly look at what's happening on price action right now with the market. Now getting back to what we were looking at, that was this time of day we were looking at last Friday. Now it's now Monday morning early, so you just had a 2B, sorry, 3B, 34B. Look at your divergence. That no doubt would have been what we call a 2D. There is your T10. Okay, we come down. Now see this little bounce down here. Okay, so this tells me I'm bouncing on a major EMA on my anchor chart 2. For a new trader, I want you to remember the term follow the cloud. See the blue cloud and or the orange cloud? Blue for long, orange for short. Okay, you want to follow the cloud. Now look at this here. Notice how I've come down and bounced off a pivot. Now as we're coming down again, down we come, automatically sorry traders, sorry I had to pause, had to cough then. All right, as you come down to a pivot, automatically expect a bounce. Now how big a bounce it will be? Now note this is a new lower low. So how do we identify when we may be changing market direction or the tide is turning? Well, first of all, are we closing below the 200? Secondly, are we starting to make new lower lows and new lower highs? Okay, so we're looking for lower lows and lower highs. Now this is our first move under the 200. When you first move under a 200 EMA on your entry chart, this will quite often is leading to a new trend. So if you do have a divergence trade, these are more likely to fail. This is sort of like wave one in a trend. So we could have taken an entry. Realistically, we wouldn't have been in until here. Now what I want you to look at, traders, look at this here on the 4 tick. Look at that there. This is what we call divergence. Let's see what that looks like on the anchor chart 1. Look over here, traders. See that there? See this here? This is called divergence. Now what's in front of look at this here. Now this is live as I'm recording this. You can see there the bar status indicator. Watch what happens when we come down to our pivot. Remember I told you about selling into a pivot, but what else did I say about pivots also? They become support resistance levels, and your best divergence trades are off pivots. Bang, that is called a 2D, and up we go. Now you look at that, there is each one of those steps there is $10. You only need, traders, you only need how many? All you need is 20 of those a day. That's all you need. Let me pull this back up here, and this is what we're talking about, 10,000 a week. Now what if then you go to 300? Well, I won't even show you the figures. 300 a day. That's and this is how we reframe it, and it does make a big difference psychologically. Rather than thinking in money terms, you think in steps. Now look at that there. There's over 25 steps in that move. That is a $200 move within itself. One thing I haven't said, I don't think, is if we take that trade there, where's my stop go? 1 tick above. And so the reason we needed that $4,000 account is on the, if we're doing it correctly, your maximum stop loss ever on this time frame is 16 ticks, which is $80. What's 2% of 4,000? It's $80. Okay, so that's why we use that. Now traders, we're up to 33 minutes, so I do need to wrap this up. But why don't you come and join me? Let me teach you how to day trade. Okay, this is not rocket science. What it's about, quite frankly, is looking for those patterns. Am I following my major EMAs? Where do I enter? Where do I place my stop? And what's a realistic target? Okay, now as I mentioned also, you can attend 8 of my live coaching sessions. So every Tuesday and Wednesday, 6 p.m. to 8 p.m. and you can type in questions. You'll be there with between 1 and 200 traders are in each class, depending what's on TV, I think. So you can type in questions where I'm explaining everything from money management through to the chart patterns. We spend a good hour on the charts, going through step by step where to enter, where to place your stop loss, and where to exit. Now, as I've shown you, you can get going with as little as $400 to $500 in your trading account. So traders, come and join me. Thanks traders, hope you enjoyed the video, and we'll see you in, well, in class. Okay, traders, thank you.